Friends, finally speculators can rejoice as the cryptocurrency market has seen a correction. But what caused Bitcoin to fall below $65,000? And what do experts say about it? Today you'll learn why the first cryptocurrency fell by 10% from the historical maximum, and whether to wait for a graphical pattern of double or even triple bottom as a gift. Let's find out. It was an incredible week. First, Bitcoin almost reached $74,000, thus updating the all-time high. After that, there was a correction, which sent the price below $65,000. On March 14th, on the first day of the correction, Bitcoin fell by 10% at once, and almost $800 million worth of positions were liquidated, of which 83% were long trades. There are various theories on the market which could lead to such a development, but let's look at the things we can evaluate and verify. So the new Bitcoin high was set after the spot ETFs for the first cryptocurrency sharply increased trading volumes, and the inflow of funds into Bitcoin ETF amounted to $2 billion in one day, while the BlackRock fund took in $1 billion. It's worth remembering that BlackRock already has 208,000 Bitcoins on its balance sheet, which is more than the US government with their confiscated 210,000 coins, or MicroStrategy, with their balance sheet of 205,000 Bitcoins. And how quickly BlackRock has surpassed them can be seen in this chart. In fact, the number one investment giant in the world, led by Larry Fink, is now in second place for owning the first cryptocurrency after Grayscale. But their ETF is facing a constant outflow of funds, and at this rate, they will not hold the first position. Now let's take a look at the result of spot ETFs for March 14, when Bitcoin started to fall. The BlackRock fund set a new daily trading volume record of $3.9 billion, but this figure includes both buying and selling. That is, the volume is large, but the real inflow of funds into the ETF fell more than 8 times and amounted to $132 million. And here are the results for Friday, March 15. The inflow of funds into the ETF continued to decline and amounted to only $95 million. Notice how BlackRock dominates this market, actually taking 90% of Bitcoins. And it seems that the figures of $132 and $95 million are not bad, if we talk about the inflow of funds in just one day, but it was a sharp decline on the background of record inflows, which played on the contrast. And then JP Morgan started to FUD. First, the head of the bank, Jamie Dimon, said that he would never buy Bitcoin and compared crypto investors to smokers. In his understanding, you can smoke and harm your health if you want to, and exactly the same way he treats people who decided to buy Bitcoin. And then the bank's analysts joined the game and said that the new highs in Bitcoin and gold are just tricks of private and institutional speculators. That is, current prices are not fundamentally sound, and the market should correct it. JP Morgan was further joined by Michael Hartnett, chief investment strategist at Bank of America, who pointed out that the stock and cryptocurrency markets are showing signs of a financial bubble. Additionally, FUD came from the U.S. Congress, where 2 senators asked not to approve more ETFs on cryptocurrencies. It seems like companies are negotiating amongst themselves to see which one will publish the next bad news. Do you have similar feelings? Write about it in the comments. Bottom line, a significant drop in ETF inflows and a dramatic change in the media agendas has led to the fall of Bitcoin and the entire cryptocurrency market. The question is whether the situation can get even worse. We'll deal with it in the next part of the video. In the meantime, you can give this video a like. Like will bring good luck to Bitcoin. In 3 days, the Fed will meet, where Jerome Powell and company will once again leave the rate unchanged with a 98% probability. Stock and cryptocurrency markets are already used to the fact that the easing of monetary policy will not begin until the second half of the year, and therefore, everything related to this event is already built into the price. Besides, I don't think that Powell will be too tough during his press conference, or on the contrary, will start promising investors a golden mountain and push the market up. Most likely he'll be neutral, especially after the U.S. inflation showed a slight increase again in February to 3.2%, but it has not risen above 3.7% for 9 months now. Also to watch out for is NVIDIA's GTC 24 conference, which is dedicated to artificial intelligence and will be held March 18th through the 21st. Founders of cryptocurrency projects are invited to the conference, and the company itself is not against investing in the crypto market, so there may be loud announcements and local pumps. But first of all, I will be watching the results of spot ETF trading on Monday and the next few days, as they are the most influential in the decision-making of both private and institutional investors. There are very simple scenarios here, and the first positive one is that when the bears are taken out of the market, Bitcoin will return above 70,000 and go on to 75,000. We may see such growth before the end of March. The main thing is that the outflows from Grayscale will decrease, and the net inflow to Bitcoin ETF will return to the level of 600 million per day or more. The second scenario is a sideways movement, when the price will remain in the range between 63,000 and 70,000 for a few weeks or more. For this, it will be enough to maintain the current market situation, when inflows into Bitcoin ETF are insignificant, and the media will not rock FOMO and will continue to talk about how overvalued the cryptocurrency market is. And the third scenario is for the bears when Bitcoin falls below $60,000, which could happen very quickly if ETF trading starts next week with an outflow of funds. Look, technically we're still in an uptrend and it's being tested right now. But in case it breaks, there is a target of 58,000, and we could easily panic if a single Bitcoin evaporates from BlackRock's balance. And we can also use the short-term holder realized price indicator. According to it, we're in a bull market where a correction of 10, 20, or even 30% is quite normal. And if it's time to get rid of some of the extra investors, then the downside target could be the $54,000 level. This is not financial advice, but if now the crypto market shows a strong drawdown, we should only worry if it falls below 54,000, because then the Bitcoin cycle will be broken again. Before that, we can safely consider the long-term perspective, where one of the most conservative forecasts is the growth to $150,000 by mid-2025. And remember that the continued decline is only one of the possible options. If BlackRock again rewrites the record for Bitcoin growth on the balance this week, the price will easily reach $75,000. Now everything depends on the big players, and you and I can only follow the trend and not play against it. Thank you for watching.